5-1 today. Chapter 5 is what we're starting. We have cash control systems. We're just going to be talking about checking accounts, depositing checks, recording these on check stubs, these different endorsements, talking about voided checks. So preparing check stubs is kind of an important thing, so we want to make sure we kind of look at that real quick. First, just the business in general. For our purposes and learning the basics of accounting, we're referring to money as cash, even though it can be written as a check, it can be paid over internet or phone. We're still recording and acting as if it's cash. We're just calling the money as cash. When they talk about cash, most transactions of cash are going to happen frequently. So eventually we'll get to something that's called a cash receipts and cash payments journals. We're not there yet, but we will eventually get there because these cash transactions occur frequently when you're paying bills and collecting money. Cash can be transferred from one person to the other. We'll do that when we write checks. They make a big deal about transferring it. We're transferring money. We're ordering the bank to pay from my bank to your bank if I was writing you a check. Safety measures for businesses are important with cash. Certain people will deposit money. Certain people will collect money. You might have another person verify the deposit. So there's checks and balances. If I'm the only one running the register, I can take $100 out of the register, put it in my pocket, then record it, then give it to you, and no one knows. We got to have, somebody to collect, somebody to record, somebody to, make the deposits. And computers make it a little harder too, but just some safety measures. We want to have written evidence that support the accounting records. We're doing basic accounting, so we're going to compare all these checks that we have written, the payments of cash, and record them in our check stubs and make sure that everything's done. Okay. The greater control Delgado has over the cash, the greater accuracy, these procedures will happen. So we're kind of just getting organized. Why are we doing this? We want to have records. So the first thing will be is this is a deposit slip. You got an account number, routing number, just like tells you what national bank, what district, state bank, what kind of charter to wherever the bank is located. These numbers indicate those. You got all the different information of your company, the bank, date, if it's currency, coin, or checks. If it's the beginning, a lot of times our problems would be the first time we open the company, so it'll be a zero balance. There won't be balances on these deposit slips. It'll just be the big investment because it's the first time we're kind of opening it, usually the first one. And then we move on. We'll have deposits like normal. Business form ordering to pay cash from a bank account is known as a check. A bank account from which payments can be ordered by a depositor is called a checking account. When a checking account's open, the bank customer must provide a signature. Okay, that's a true-false question. Some of these are true-false and vocab questions. You will have to open up an account, sign a signature card. This thing that we were talking about is a deposit slip. It's just a bank form that lists all the currency, coins, and the deposits the checks that will be made into that bank account. Okay, the bank customer prepares a deposit slip each time cash or checks are deposited in the bank account. Now, times are a little different. I can go to the bank now and take a check and just put it in the deposit. It'll give you a receipt. You should be recording all that. And they're just talking about right here what's going on in this slip. So you'll be asked to fill out a deposit slip, date it, if it's checks, if there's currency, if there's coins, add them all up and get a total. Okay. Now, later on, we'll talk about journalizing those. But for right now, we're okay. Deposit recorded on a check stub. This is a check stub. And over here, you can see where this perforated edges would be where you'd rip the check off and give it to them. They always tell you to record the check stub first, then write the check. I never had a check stub as a personal account. I always had a check register where you flipped it over and wrote it down. Companies do it different, whatever. But this is the way we're just kind of learning as far as recording and keeping organized in accounting. After the deposit is recorded on the check stub, a checkbook total is calculated. So like I was mentioning before, a lot of our first examples with deposits, we'll start the new company, so we'll have a balance brought forward to zero. You'll have the amount total here, the date with the deposit, so 0 plus 2,000 is the subtotal. We leave this part blank because we haven't written the check. We're just recording the deposit on the check stub. We usually record the deposit on the next check stub available. These lines would be for like interest or service charges. We would add and subtract when necessary on that check stub when those occur. And then we would get a new subtotal, and then we'd write the check total, who the checks to and for up here, and we would put the amount of the check here and subtract from our subtotal to get a new balance carried forward. So that's how we're going to be looking at things. Balance brought forward is 0, so this is all just what I was basically talking about. We will journalize these things later, because we usually journalize like the TS, 18 means we recorded cash and credit card sales, so we already did it in the journal, then we got to record it on our check stubs too. So no journal entries needed because we've already journalized these. Like I said, we're going to get into cash payments and cash receipts journals later. Endorsements. There's 3 different types of endorsements. A blank endorsement is just a normal endorsement we'll get to. Special endorsement is signing a check over. Let's say somebody wrote me a check and I wanted to give it to you. I'd say pay to the order of, and I would put your name, and then I'd sign it. So I would transfer that ownership. But can ownership of checks be transferred? Yes. Okay. Yes, you write a check, you can transfer it over. Any signature or stamp on the bank of the check showing this transfer of ownership is known as an endorsement. Like I said, we're going to do 3 of them. They want the endorsements to be signed exactly as the person's name. Sometimes that's difficult. Somebody might write the check to the Smith family, and then you'll have to cash it. Part of that, hopefully, is when your bank will be able to work with you. But for the most part, we're signing the name exactly how it is. Ownership of check can be transferred several times. We're going to get into that. That's what we say with the special endorsement. But they give you the first example, blank endorsement. All right. And somebody wrote a check to Michael Delgado. He's endorsing it by signing Michael Delgado. Usually there's this area up at the top where it tells you to sign and write your signature there above this little line that they usually have. An endorsement system, only one person's signature is this blank endorsement. Okay. They always tell you don't sign it before you go to the bank, because if you lose it, somebody might be able to cash it. It's kind of hard to cash a check that's signed by someone different, but there might be ways to do that. So just be careful that you sign it when you're going to go. You don't need to sign it early. But that is a blank endorsement. Writing a check, like your grandma writes a check for your birthday, you just sign your signature. Special endorsement is when you transfer this endorsement to a new owner. So someone writes me a check, then I transfer it. So someone wrote Michael a check, so he's transferring it to Helen Goldsmith. So he writes pay to the order of Helen Goldsmith, and then writes his name. This rarely happens in personal life, probably rarely happens in business anymore. This is something that used to happen more frequently. Now you can do things like Venmo. You just, hey, here's $10, and then you Venmo it. I mean, there's different ways of transferring money. But for our purposes, for accounting, we're just talking about learning these endorsements. The special endorsement is transferring new ownership of the check. So it was going to be it's written to me, but I'm signing it over to Helen Goldsmith. Okay, special endorsements include the word pay to the order. Only the person or business named the special endorsement would be able to cash it, because we transferred the ownership because we signed it over to them. Okay. Blank endorsement is just a check written to you and you sign it. Special endorsement is paid to the order of and transferring the ownership over to another person. The third endorsement is restrictive endorsement. A lot of times it's a stamp you'll see from companies. These are easier to protect. You just stamp it. And it's a way of transferring the ownership that's a little more restrictive. Usually when we stamp this, it'll go just as a deposit straight into the checking account. That's more business-like. Okay? If the amount of the check written in is different than the amount in the words, the bank may refuse to process the check. That's just kind of something that is normal that we'll talk about when we write these checks. We want to make sure that everything's written legibly. So those are the 3 endorsements. Blank endorsements, just a regular. So Delgado wrote a check to Eastside here. A blank endorsement would be written just Eastside Supplies. Okay, if they wanted to transfer ownership over, it'd be a special, you would transfer it over, and you would then write those words, pay to the order that we showed you here. So just as a review, pay to the order is a special endorsement, restrictive is the stamp. Now we have a check here, and we have all the steps. You see all the red line steps. They're all listed here. One of the things in the vocab is this post-dated check. When you write a date, you can't cash a check until that date. Usually, that's what the bank's supposed to do. So let's say you don't want a check to be cashed for whatever reason until January 2nd. You might write them a check on December 25th. You say you write it on Christmas, but don't cash it till January 2nd. That's what's called post-dating, writing a check with a future date on it. It's just something that they mention here. It's just something that you want to make sure you understand. These are all the steps. We'll walk through them real quick. You first want to, they always talk that you want to do the check stub first. The numbers are written here in order. Checks are pre-printed and pre-written in consecutive numerical order. You're writing the amount of the check here, the date, who it's to, what it's for. Okay? Again, this is business. You don't always maybe write that when you're writing personal. The balance brought forward we talked about was 0. This is the beginning of a new one. We already recorded a deposit previously, so we have 0 plus the $2,000 deposit. We have a subtotal. There are no others, interest, service charges, or like, so we just drop that subtotal down. So 0 plus our initial deposit is $2,000. No changes to that, so we drop the deposit subtotal down. Then we subtract this check number. We write here, and we write here, and we write here. Subtract the check number, and we get a new balance that will be carried forward on the next check stub. When we write the check, you write the date, year, who it's to, how much in numerical, and then written out in like English sentence form. When there's no cents, we usually write in 00 over 100 or no over 100. I used to always write 00. And then you put this little line. We don't have to do that anymore. Before, we used to have to write all this out. The line kind of shows up. You'll sign it, and then you often are asked in business to put the 4 down, at least in our accounting. So we'll go through these steps. Check stub first, then we'll go through here. If there's no deposit, then there's no deposit. We might just have a balance brought forward, a subtotal, and then a check. We might not have that deposit area. You don't make a deposit on every check stub. But that is completing the check stub and a check. We'll be asked to do that in our problems. Lastly, we're going to be voiding a check. Let's say there's an error made and we're writing a check. They're all, like we mentioned, they're all in number order. So we want to keep track of these. We don't want to have a check out there that we don't know where it is because they're all in numbered order and we don't know if it's lost or stolen because we didn't record it. We just wrote a check and ripped it up. So we want to, in business, we want to record these checks as voided checks. You put a stamp on it that says voided. You put lines through it, but most time the businesses will put a void through it. And we just record void, check number C24. We made a mistake. We put a check mark there, if you recall, because why? Because we're not posting anything in this. This is just a mistake so that later on we don't go, hey, where the heck is check 15 at? We don't have a record of it, and you might not remember that you ripped it up when you made a mistake. So if there's an error made preparing a new check, we need to preparing a check, we would need to void it, write a new check, and we got to record the voided check. There's nothing to post. There's no numbers written because there's nothing that check's not being used. We are strictly doing this to keep our records. So we have a check number 16 after, we have check number 14 before, we just go in order. Okay? A check that cannot be processed because the maker's made it invalid by voiding it because we made a mistake, we void it. That's called a voided check. Okay? We can write it, we can stamp it, put it anywhere you want on there. Okay. Again, why are we doing this? If a check number is missing, there's a question whether all the checks have been journalized, and you're running around trying to figure this out. And again, as a reminder, you always complete the check stub before writing the check, otherwise you might forget. So the voided check journal is just writing void, the check number, the post reference, just a check mark because we're not posting anything. Just a way of keeping our records. That is it.